We've got Jyotivardhan Jaipuria joining us this morning as well, founder and CEO of Valentis. Good morning, Jyoti. A day ahead of budget. What's the anticipation like?
Hi,
Anything key that you're expecting this time around?
My view is like budget is not a big event for the market in general because, the budget making has become much more transparent. So in some sense, a lot of reforms happen through the years. This time, I think, what the market generally looks for is the tax changes. So I think, the GST now means that a lot of the GST changes are outside of the budget because they have to be done by the council. Second is if you look at the direct taxes, there's actually a committee formed to look at the direct tax code whose report will come only at the end of July. So to that extent, I think all the tax changes may happen only in the next budget and not in this budget. So here really, probably what the finance minister will lay out is her vision over the next 5 years on how she looks at raising revenues. Especially I would be focusing on whether there's a big thrust on disinvestment and not the way it has been done, but more in terms of are they looking to really sell some strategic stakes in companies and privatize them. The second thing I would be paying attention to is the public sector banks and whether there's a big amount for recapitalization of these banks, because one of the problems we have been facing is that banks are today not willing to lend at all, and with the NBFCs coming under strain, we need to recapitalize the banks so that maybe some lending starts again. The third thing would be what they do in terms of infrastructure spend, because if the amount, probably that's the only way to really kickstart the economy, because I think the private sector capex is going to take at least 12-18 months, maybe even 24 months before it really kicks in. So there's a lot of onus on the government capex to try and kickstart the economy. And if this means that we have a very slight increase in our fiscal deficit, I would probably be okay with it.
Okay, good to hear that then. But Jyoti, what is that fiscal deficit print which you think will not go down well with the market? I mean, a 3.5, 3.6, I guess, is still handleable. But anything beyond that would you think would spook the markets? Because, I mean, irrespective of any move which may come in at the cost of fiscal deficit, but I'm sure that there's only that much that the market will be okay to absorb.
Yeah, so like you said, 3.5, 3.6 would be okay, especially if we can get a little more credibility to the revenue numbers also. So we think, okay, this 3.6 is going to remain 3.6 and not get exceeded. So I think, that's something which the market would be okay. I don't think, we are really going to go suddenly from 3.4 to 4 or something, because that would start getting a worry that, okay, is this like a wise move, or do we suddenly find, government borrowings crowding out everything? So I think, there'll be maybe like a 0.2, 0.1, 0.3. Those are not big numbers by itself. And that is something the market would be okay with.
Okay, let's talk about, which parts of the market you feel could get a boost from the budget, whether it be sentiment-wise or otherwise, if we do see an improvement in liquidity conditions or capex, and what's the kind of turnaround time you're looking at as well? Where would your focus be, Jyoti?
Even for the last 1 year, our focus actually has been on capital goods and infra-related plays, because that's where I think a lot of the spend is happening. Like if you look at the problems in the economy, it's partly to do with the NBFCs not being able to lend. And second is the private sector capex is not happening. So to some extent, the onus on the government capex is very high. And we think that is what has really been driving the economy. So we've been playing capital goods as a way to, benefit from that segment of the spending. The second thing we've been looking at is, the corporate banks, where we think to a large extent the big NPL provisioning is behind us. And so going forward over the next 2 years, 3 years, we'll see NPL provisioning coming down. And so these banks will benefit from that. The third thing we've been looking at is cement, which again is like a proxy to the government capital spending. So I think, these are some areas which probably will benefit from the budget, because there'll be onus on infrastructure spend, and hopefully the amount which they do will be reasonably large, because that's what is the only thing which will help kickstart the economy today.
Aside of that, Jyoti, what do you think should the market draw out from the kind of, crisis of confidence that one is seeing with regards to the lending sentiment in the market? What's happening with NBFCs right now, the stricter norms which are going to come into force? Where do you find investment opportunities? And do you think in this current turmoil, there's anything which is both value-wise as well as growth-wise looking okay to put your money in?
Yeah, so like in some sense, what the NBFC crisis has done, and I think that's probably where the government should focus more than the budget. It means that one is now banks are finding it easier because because the NBFCs are not lending, banks can go choose their customers. Most customers are now coming to the banks, so that becomes one more reason why we play the banks. If we can get the PSU banks recapitalized, then maybe banks are flush with money and there'll be a little more urgency to lend, because today everybody's become very risk averse, nobody wants to lend. But at least if you have more capital, there is some requirement that okay, at least let's start lending a bit more. So I think that's one way to get the banks to start lending. Second is, if we see the liquidity in the system, in some sense it was negative for the last 15-18 months, and finally liquidity has turned positive. So that's one important sign which is coming about, that okay, we have liquidity in the system now. And so that probably helps transmission to some extent, and it probably helps banks to lend again to some extent, because these NBFCs are not going to get sorted out in a hurry. There is a bit of crisis of confidence, and people are worried about lending to NBFCs, so in turn NBFCs are not able to lend. So we have to go back to banking system and try and see if we can get the banks to lend much more.
Jyoti, let you go on that note. Thanks much for joining in and giving us your take on the equity markets as well as your expectations from the